Hi, I'm Elizabeth Jackson. My business is Public Property, and I want to thank you for joining me today. Regardless of whether you're in your car or sitting on your couch, knowing how to get your first property, and I'm here to help you with that. This is a short presentation, and I've done that on purpose. I've done that because I don't want to take up any more of your time than I need to. This is an affordability program exclusively for first home buyers. Our single purpose is to increase the first time home buyer ownership in Australia. Your home, our economy. Our economy has shifted, possibly neglecting the key civil fundamental rights of all Australians, evidenced by the continuing decline of first home ownership. We are now in crisis, risking the great Australian dream of owning a home, ultimately impacting our social fabric and economy. This is an affordability crisis. Real estate prices increase around 2% greater than household income. So an example, a property that has a value of $500,000, its key value grows at around $2,000 per month, making it harder to save for a deposit. Government solutions are simply not enough. Handouts won't work. A focus on investor sales and an incorrect balance, too many investors versus owner-occupier, contributes to the long-term adverse social impact. The economic shift is causing too many to miss out. The problem. Now look, you're going to know this problem because you're in it, but I'm going to share it with you. We had last year, just in Victoria alone, we had 144,357 people moved into Victoria between 2016 and 2017. Our projected population will grow from 4.5 million to 10 million by 2051. We need to build another 1.6 million homes. We have a shortfall of 9,000 properties for the demand that Victoria is experiencing. By 2020, we will be undersupplied by 50,000 homes. The median house price now is $903,859. Are you missing out? The property economic shift may cause you to miss out on family safety and stability, mental health, breaking free from renting, more dignity, building wealth, equity, financial options like education, health, funding a small business, and most importantly, nest egg retirement. The real secret. For owner-occupiers or investors, base principle is the same. An example of gains at only 5% compound growth on a property that's $600,000. So year one, at 5%, that property will earn you as a soft margin, $30,000. By year three, it would have grown by $94,557 to year 20, where that property would have grown by an additional $991,979. Average increase over 20 years is at $4,133 per month. So regardless of timing, discount, or other clever strategies, you ultimately have to be in the market to benefit from compound growth. How to get in the market? The program. Afford Assist is an affordability program exclusively for first-time home buyers. It provides a much-needed deposit solution for first-time home buyers so they can buy a property with no deposit, no or low deposit. It's a corporate solution offered alongside government initiatives. It is a fair program and it provides seller and buyer protection. It can be used on all types of properties. The program is a deposit solution, or as we call it, a DDA, a proprietary deferred deposit agreement, 10% of the property purchase price. So in some cases, the developers will leave up to 10%, and that may vary from developer to developer. A DDA is between the seller or the developer and the buyer. There are no application fees, mandates, or interest. That's the unique thing about this program, is you are not expected to pay back more than what you borrow from the developer. There's seller or developer protection. So that's the developer that provides us with the properties. We must be a genuine committed buyer. The buyer must pay the deferred deposit in accordance with the contract of sale. So whatever the terms are as outlined in the contract and the DDA, you must pay the developer back in accordance to that. A charge on the property, ensuring the property is never sold without the repayment of the loan. And what that means is you can't re-borrow against that property until you've paid back the developer. Consequence of failing to repay. So if you cannot repay or you stop repaying, you will be expected to sell the property, and the surplus representing the capital gain on the property remains the property of the owner. So if you stop paying, you must sell your property and the developer must be paid back first. Owner's cash security. In some cases, the buyer may also be required to deposit a cash security. Buyer protection. So, you the buyer at home. This is a fair pricing model. The owner must sell properties through the program at a price equivalent or less than similar properties sold by owners in the same estate. So they can't whack a lot of money on and then give it to us for us to sell it to you. It doesn't work like that. Financial institution. Approving in principle that the buyer can service a loan at the purchase price. Loan pre-approval and serviceability statement. You must be financially assessed. We must know how much you can afford to borrow, and that's important. You will not get a property from us and then we'll try and work out your borrowing. It doesn't work that way with us. Serviceability assurances. The program requires that no property is sold to a purchaser at the price which is above 95% of their approved serviceability. What that means is, whatever you're approved for, we will lower that by 5%, and that will be your buy value or your borrowing value. Funds to complete. If you're a first-time home buyer, depending on where you purchase, you get a government initiative or a government grant, which is a first-time home buyer grant. So that gets taken into consideration. Your cash savings gets taken into consideration. The DDA is actually incorporated into that. Now, to be a part of this program is to ensure that you've got enough money behind you that you can fund the serviceability on the lending, that you can pay the conveyancer, and that you can manage the repayments back to the developer. The developer repayments are actually considered in your borrowing. Developers. Only top-tier developers can participate in this program. Because of the generosity of the developer, they can only be top-tier developers that are a part of this program. What that means for you is that you're actually dealing with some really great developers that really care about being able to provide a solution into the Australian property space for first-time home buyers. All developers are vetted. We have properties all over Australia. Now, house and land packages are built or created for our clients. After you're financially assessed, then you come through to us. And if you're interested in a house and land package, then based on your financial outcome, then we will package a property for you based on that. The process. Your first thing you must do is you must decide whether you want to go ahead and be financially assessed for this program. So down below you'll see a link. If you've decided that you want to ensure that you can go through and you can get a home with us, you must register on the link. You'll be contacted by a member of my team. Lending is important, as without it we can't proceed. So that's why that's the first thing. All of our lenders are independent from my business. Once you have your borrowing ability, then we can package a property for you. Mindset. Once we have your numbers, you'll need to consider your next step. You will literally need to change your mindset from a renter to an owner. We can't do that for you. We will not package any property until you tell us, I am ready to transact. I want to finish by saying this. We've got purchasers coming to us that cannot afford to purchase in their current area. And that's fine. But they do have a borrowing capacity. So what we're looking at doing is packaging an investment property for them to actually get them into the property space. Now the variables change on that. You'll still need to be financially assessed. You won't have the first time home buyers grant in that package, but the rules will be the same. You will still need to have some cash. You'll need to have a good credit rating. When you go through to our lenders as well, you will be required to give them all this information, and they will not be able to assess you without it. Have a great day. I'm Elizabeth Jackson from Public Property, and I'm here to help.